So we're going to begin talking about market segmentation, which is the most basic of basic principles that it takes to understand the market. And you can really facilitate an entire trade plan off of this. It works for long term, it works for short term, it works for futures, forex, options. It works for just about anything. And the reason being is it's such a simplistic view of the market that it really helps to move around any of the noise and keep all of the ebbs and flows into check. So what we're going to start doing is, and again, there's no right or wrong way to do this. This is just going to help you visualize the market in a manner that makes sense to you. And the more you do this, the more you'll see similar things that other people see. So I'm just going to start and talk through the basic principles of what you're looking for. So when we think about the market, right, we oscillate all the time. In this movement right here, there are, and you can kind of see it, there are lots of ebbs and flows. We rise, we fall, we rise, and we'll keep doing this throughout the entirety of a run within a channel. That happens on every time frame. So if we zoom in this run up, there's a similar thing. The entire time that we're running up, we're doing ebbs and flows. Same thing as we come down in this much more abbreviated session, we're still doing ebbs and flows. And you can see it, not expecting anyone to understand what they're looking at just yet, but you can see it manifest in the higher time frame wicks. But what I'm getting at is that if you were to reduce your time frame, you would see the market doing basically this just on a different time frame. So it would happen much quicker. But the principles and the way that you can interpret this are very much the same. So what I look at when I start to think about market segmentation is looking at the market in terms of bulk moves and in terms of one move that really defines a space. So for instance, I look at this run up right here, and for the purposes of this first video, I'm going to do this very much using really basic and really large chunks of movement. So I look at this first segment of movement as right here. And what I'm going to do is drag this across my entire screen. So you can see that not only do we fill this level of movement once, we come back down and fill it, but once we break out of it, we establish another segment. And that's important because that's the entire purpose of this practice. And when I say practice, it's not, I don't mean practice of you practicing, but this practice as an implementation. So when we're looking at market segmentation, we're going to very explicitly define areas of movement that the market would make. And don't be afraid to adjust as you go through or do it multiple times so that you can see various manifestations of the market. I'm going to try and alternate my my segments so that I can differentiate. Next up, and the thing of it is, you don't necessarily have to start all the way at the left to drag over. You can always extend your segments over to the left. Just look at it in a way that makes sense to you. This is another interesting situation that we've come to, right? So the next segment can be interpreted one of two ways. You can look at this and say this is the top of the movement, right? This is from the break of the previous segment all the way up to the top of the movement. Or you could really identify this as two separate segments. And I'll just use a line in the middle of this to identify. So we could have this be one giant segment, and we could put a pivot point, which we'll get to on expanding best practices for this market segmentation walkthrough. So we could either put a breakpoint in the middle and identify that as a really interesting piece of information, or we can break this out into two segments, which is the short-term movement right here, and then the longer-term range, which is up above. For the purposes of this video, I'm going to leave it as one larger segment, and I'm going to try and go about this in a way that highlights larger scale moves. But that is just one quick thing to identify. Now, and again, this doesn't have to be perfect. So you can see that there's some carryover, right? You can see that this is really where that first iteration of movement stops, and then we drift down. But then here we drift further up, really to this level. So you don't have to be perfect with it, but knowing how important this level was in terms of events, I'm going to expand on that a little bit. So from here, I would look at my next set of movement, and in looking at the chart, really it's from the break of this level up to either these lows or these highs. And again, for the purposes of this video, I'm going to look at it in terms of these highs. This one I would do regardless. This one I would leave as these highs regardless, because this was such a volatile period, and you can see that price really moved very quickly once we broke out of and off of this zone. Then we really just took off. And then when we fell, and this will make more sense to you the more you start looking at charts and interpreting candles, but I don't want you to think about this in terms of candles yet. I want you to think about this in terms of movement, is looking at price. When it dropped, it stopped right at the top of the zone and then popped very quickly, and it didn't really start to move aggressively again until we got into this zone. So we fell and filled very quickly, we popped up to the top, and then this candle right here means that we struggled to move up past the top of it, and you can see that we just basically topped out there for 3 weeks before we broke above it, came back and retested it very quickly, and then took off again. So I look at the top of that zone and I say, okay, I don't necessarily want to pigeonhole myself into stopping short of a really important piece of information when I start to think about the market as a whole. From here, I'm going to use one of two things as my next high point. I'm going to think about breaking out of this zone and either stopping here or stopping here. And if I really look at quantity of touches and quantity of decisions made around that zone, I am very much less likely to choose this, because this is this spot, because this is really the only time we stopped here. Everything else just chopped right through it. Whereas if I were to raise this, there were a lot of important decisions made at this point. There was one right here. There was a breakout right here. This kind of came close before deciding, but then this very much came and touched it to a T before starting to take off. So I will use that as my next zone, my next high point. Then from here, now it starts to get fuzzy, because this was one giant run up. This right here was kind of amazing to see. To hit those new all-time highs was really impressive to see. So if I start to think about what is my next important piece of information to have, and this is what's great about using this rectangle tool to identify this, and you'll see you have other options in the future. But this is what's great about using this rectangle tool is it allows you the opportunity to place things and get a sense for what makes sense. Uh, I use sense twice very quickly there, but you use it gets a sense for what on the chart looks digestible to you. And if I do this and play around with it, there are again two options. I could go very large movement, and I could go from here all the way up, or from here all the way up to where price trickled out at the top. But in this case, I'm going to go against what I've done in the past in this video, and I'm going to highlight a smaller zone. This to me is very important because if you think about this movement, this is one very large run, and there's not a whole lot if you look at it just from reading left to right in terms of like reading a book. There's not much that you can glean from this run up. But if you look at this in the context of the entirety of the last, when did this start? February 8th of 21. So in the last 2 years, if we remove this, more recently, this area has shown itself to make a lot of sense. If this hadn't happened yet, and we were here, then I probably would go all the way up, or at the very least to right here, because there wouldn't have been anything to establish more movement. And that's why looking at the broader picture makes a lot of sense and is very useful. So I'm actually going to use this strictly because of the movement here, which filled this very quickly, these stops, and this stop, and these couple right here. So I'm going to use this as my next zone. And I am going to drag that all the way over. Well, loosely all the way over. Not that it matters, but it's a visual thing for me. Then from here, using this top, I again start to place what makes sense and identifying this range. While it's not, again, super clean in this incredible run up, I do find two more spots right here that make sense and are roughly the same as the top of the range. So this is what I would identify as my next highest point. And you can see that when we start to get into rangy trading like this, having these segments is very helpful because, again, we'll get into this later in the course, but what you can do is set boundaries on your chart and know that you're trading within very aggressive boundaries, right? So, for instance, what I can do, and just to give you a little teaser, what I can do with this is adjust how the chart is manifested into my overall usage by just changing its representation. And if I take this out now and I leave these bright neon lines on my chart and I drop myself down to the 30-minute, well, that's not even close enough. You see how much movement we gain just from dropping our price. You can see that, and this isn't exact. This is where it would make sense to start to make it a little more exact. But you can see that this then becomes a very, as I'm trading around here, this becomes a very important area of decision making that I can just constantly keep on my chart and know basically as an internal dialogue with a legend of saying, if I see a sharp neon blue line, I know that's the boundary of a market segment. And if we break above it and come back and retest it, then I can very confidently and comfortably take a trade around that in the opposite direction because of what's called a break and retest, where you break out of a zone, come back, and it's not exact, come back in that area and then really take off. So all of this is just my long-winded way of saying there are multiple ways to manifest segments on your chart that are impactful to how you're looking at it currently. So my next segment, if I look at this, it's very clear to me that it would be right here, and then that leaves us room for our all-time highs, which is right here. And with all of that said, knowing absolutely nothing about charts and technical analysis and trading as a whole, you can zoom out and take a look at this and say, okay, this kind of makes sense. When we're in this gray area, then I can expect that price is going to trickle throughout here. If we break below it, then we establish a new zone. And keeping these zones on your chart and handy, especially when you start doing this on the lower time frames, the 4 hour, the hour, and you think about it in the context of a week, a day, a month, rather than all time, really is a powerful thing to keep in your mind, because it helps you identify previous movement and make educated guesses and decisions about your future movement. So with that said, knowing nothing about charts, having not set up your charts, all you need is the ability to go to drawing tools and grab your rectangle, go to a weekly chart and customize list, drop down to the weekly one and just make it for as long as you possibly can. And then from there, do this and see what makes sense to you. And it doesn't have to be on what we're going to be trading, which is, in this case, the ES, the NASDAQ, the Dow. And I will have a new video shortly coming out that establishes what charts we're going to be looking at. But I wanted to get you excited about looking at the charts first. So in this bar up in the top navigation here, type /ES and it will bring you to this chart. Or you can type /NQ and it will bring you here. I would recommend starting with either of those two, preferably /ES, and then that way you have a reference point too where you can look at this chart here.